Check. Welcome in, everybody. How's everybody doing? Are we surviving the day 8 of market chop consolidation, whatever you want to call it? 8 days of no really nice trend. Frustrating if you're trading QQQ and SPY. Rena, good to have you. Rudy, good to have you. Bobby, nice to see you in here, man. Glad to see you active, putting in the work, slowly paying off for you, which is good. We'll let a few more people trickle in, but yeah, like I kind of said in the post on Discord earlier, this is basically just a charting session, but using the options chart to find levels. So, if we don't have a few people volunteer, it's basically just going to be talking about some trades that I took. And I don't want it to be about me, I want it to be about you guys. So hopefully a couple people, honestly, if you guys took a loss and it's a bad one, you're embarrassed, just within Zoom here, you can just change your name and change it to iPhone or guest or whatever if you want to be anonymous, and nobody will ever know. But we'll take losses. But yeah, hopefully one or two people have a a chart and a trade they took either. It could be last week. It'll be more difficult for me to pull up the option chain, but yeah, hopefully people got some stuff going on that they can show me. Yeah, we need a cheddar flow and unusual whales class, Rudy. It's a pretty deep dive. Joe, Discord name, a Joe named Joe. He's probably the best with flow that I know of. So I would ask him any questions. I don't think he uses cheddar. I know he uses usual whales, but he did a lecture on it, but it's a lot. And if people ask me or message me, flow is maybe 5 to 10% of my trade process and thesis. Um, I don't I don't start with flow and make a trade around it. I'll note huge buys or huge sells or something like that. But day to day, like QQQ and SPY, like I have order filters up, but I don't take a trade based on that because I've seen $500,000 order go through $500,000 on SPY puts, and it's like 3 days expiration. It's like you don't know if that's a hedge or a bet, and then SPY shoots up. You're like, okay, did they just lose big or are they hedging? So smaller stuff though, smaller single names, I definitely will take note of flow longer days out. But yeah, I agree. We need a class on it. I personally feel like some of these are repetitive that we do. Hopefully you guys don't find it too boring, but yeah. Well, we got 23 people, I guess 22 because I'm one of them. Give a couple more minutes, but then we'll dive into it, guys. Got some new faces. Anybody new here from the sale from St. Patrick's Day? Let me know in the chat. Anybody new? It's good to have you guys in here if you're new. Anybody? Anybody? All regulars? New CT326. Glad to have you. Totally new to options or new to OOT Discord? Just kind of curious. First live class. Oh man, hopefully I don't let you down. All right. New to options and Discord. All right. Well, hopefully it's the last Discord you ever join. But it's a lot. Take it slow, but I think what you learned tonight will definitely help you guys out a lot. A lot of what I talk about tonight, I'll go over it more, but a lot of what I guess we can get started. A lot of what I talk about is just creating a plan, and it kind of takes the mental and emotional side out of it. If you can enter and have a plan and say, hey, I'm entering here and I might see some red and that's okay. And you know how much red to expect or see, it takes the emotional side out of it. When your money's on the line, can you enter here and sit through 15 or 18% red? And is that dollar amount okay with you? But yeah, that's the main focus. But hopefully, a lot of it, like I said, some of this will just be charting and you'll be like, okay, he's just charting. But when I show you the options chart side by side, hopefully for some of you guys, it might be like a light bulb moment for you guys. Like, wow, why did I set a 20% stop when support was 21% away and it bounced out, you're bounced up and then, made the move you wanted. And so, but yeah, I'm gonna try and do these lectures twice a month, bi-weekly, whatever you want to call it. And I guess my Discord name is Startedwith for you guys that are new may not know. But yeah, this thing, it's gonna vary slightly depending on if you're in a same day. I have an example of that. I have a really good SPY and SPX chart today of how you hold and you sit through an hour of consolidation and then you get the move you want, and then you look at your contract and it's still red or it's not even break even though the price of SPY is higher. So things will vary a little bit depending on if it's a same day expiration or a week, a month, or a leap out. It's just very, it's going to vary quite a bit. But yeah, it's why this matters, how to avoid getting stopped out, only for it to make the move. We've seen it every day in the market or in a Discord. people saying, oh, now SPY does, or now QQQ makes the move after I'm out. But it's to get in the mindset, use the chart, play what's in front of you, keep your emotions in check, and not the money in front of you. Play, sell where it tells you to sell, not because you're excited and you want to post to the gains tab or whatever. Like, sell where it tells you to sell when you're right or wrong, based on the chart. And then, of course, questions at the end or throughout. I got the chat open the whole time. I'll try and keep an eye on it, but just stop me if you guys need clarification or want to go over something more in detail. And at the end, if we got time, we'll do some general charting and also hopefully a couple trades you guys have taken, whether it's a good trade or a losing trade. We will talk about it and kind of figure out how you could have done things different. But yeah. All right. I asked this a lot. I asked this on my classes. Even before, someone tell me in the chat, even before we get into trade, you see Tesla moving one way, before you dive in, what do you need to do? Maybe it's obvious, maybe you got to think about this question, but there's a couple key terms or phrases I'm looking for. Someone let me know in the chat before you dive in. Of course, I hinted on the first slide, but levels, yes, Rena. Levels. Anybody else? Anybody? All right. We need to build a trade plan. It seems obvious, but I've been here in this Discord for like 3 years, and I see it almost every day. People get in a trade, and they're in calls, and really the chart does look good, but they either bought the top of a candle, and now they got to sit through some red, and they're freaking out. They're not sure what to do, and so that all comes down to trading plan, you guys. Before I enter any trade, I chart out my take profit zone, my stop out zone. Whether you guys are taking trades of your own, or even if you take something from the analysts in here, like you, I guess in a way you're a customer and you're paying, you have the right. If when Nando learned at Square, you have the right to say, hey, when is your stop out, what level, and what are your targets, what are you looking for? And I guarantee all the green names in here, all the analysts, they have a trade plan. They will tell you. I don't have the Square chart in front of me, but he's going to say take profit around the 80 zone or under here and stop out over whatever it was on Friday when people are kind of freaking out. I've seen a lot of people freaking out on Square because I think they had a small move up or gap up. But Zabes or whoever it is, just say, hey, I entered this trade with you. What's a good stop out? What's your level? And so you guys need to have a plan, because I'm telling you, it helps with emotions, helps with your mentality, and it helps give you confidence of what the heck you're looking at. We could be caught in some chop or whatever it is, but charting out and sticking to a plan is always the best thing. And so, because I see a lot of people, they get into SPY calls and they're up 20% and they take the screenshot. But I guarantee there's some of you guys, while you're taking a screenshot and you're typing about it in the chat, and then you post a gains tab, and then you come back and now your trade is break even or down, because you had no trade plan. You're just looking at the percent, you're looking at the money, and you're in calls when we pushed up and rejected resistance or a big overhead area, and so you guys need to have a plan. So yeah, before I hit the buy button, I zoom out. You guys will always say zoom out. I say zoom out, look left. Check the charts, larger time frames. So 1 hour, 4 hour. Today's a good example. I got an example of QQQ. I think we gapped down or traded down at the open, and people are diving in puts. There's a bear flag on the 5-minute. Everyone's diving in puts at support, and I zoomed out. I checked the 1 hour, the 4 hour, the daily, and I made a comment. And we'll go over that in a little bit. But if you bought a few of those opening candles, 15 minutes in the day, and you bought those puts, like, you probably seen some red and you probably got stopped out because we bounced a little bit. We didn't bounce super hard right away, but we bounced. And so, my point is, if I'm entering whatever it is, or someone say, hey, can you check this chart? I go the 1 hour, the 4 hour, I look where we're at. And if it looks good and my thesis still stands, then I check my strike prices. Does it have liquidity, good open interest kind of thing? And then I draw my risk and reward levels. And so, my stop out is always one level. if I'm entering something at 50 bucks, my stop out is 45. That's my hard stop. That's where I'm selling them all. No ifs, ands, or buts about it. That's when I'm wrong and the trade is invalidated. And then my reward, my first target on my reward, so risk reward, my first target of reward, I always want it to be bigger than my risk. You never want to have a risk. Does everyone not know what I'm talking about when I say risk reward? If you don't know, let me know in the chat. Don't be embarrassed. But my risk always needs to be smaller than the reward. So if you're looking at a stop loss of, $20 on a $100 buy-in and your first profit's only 10 bucks, well, your risk is twice as much as your first reward spot. And so you always want a plan. And I'll show you guys on the chart when we dive into this. You always want your reward, they always say, make it double or triple of what you're risking. This is, I'm not gonna say gambling, but you're taking a chance, you're taking a bet on this, and you want the bet or the thesis to play out. And so if you're risking a ton of money or a ton of percent, for crumbs, if you're entering Nvidia or Tesla, something crazier that moves really fast, it's $1,000 contract, Nvidia say, and you're selling it for 15 or 20 bucks. Like that's a horrible trade and a horrible trade plan. And to me, that just says you're playing Nvidia because you want to, because you think it's fun or think it's the rush, but that is a horrible trade plan. And so again, my stop out process is easy. It's always a single level. My profit area, my price target is always larger than my loss. And I try and have 2 or more zones of profit. So you'll see here in a couple charts and a couple examples, you'll see my stop out zone, and then you're going to see my take profit zone. My take profit zone, again, is always bigger. And then you'll see, I always want to hit one profit zone for sure, and that's a heavy trim. And then after that, you let the runners run, you move stops over entry and all that stuff. Again, so this is not about the charts I show you. It's not about the profits and the money I made, but it's about the thesis and, kind of what I'm showing you guys here. So let's take a look. All right. You guys seen this in the chat today? Maybe did, maybe didn't. 12 minutes in the open. I'm not alerting trades. I'm dropping hints. I'm dropping breadcrumbs of just stuff I'm looking at, stuff I'm seeing. But 12 minutes in the day, I'll zoom into this. This is today, so I'll zoom in on a 5-minute time frame to show you guys. 12 minutes in the day, though, I kind of just peeked in the chat and I said, big old support here. I'd be trimming puts, kind of hinting if you swung, if you had puts here and you swung, this is a huge move. And we're coming into the zone here. I said this is a big level. Why is this a big level? So let's focus on this. This is 438.60 here, and look at how much or how often this was kind of, you hear me say a lot, just kind of a made up word. I call this zone a pivot. So over it, we push and we trend. Under, we sell hard. Over. So this is kind of like a pivot point, as you can see, or think of it that way. And so that's why I kind of hinted, right here, I said a big support here, trim puts, secure puts. I didn't say, dive into calls. I was hinting at that, but I'm also trying to tell you guys, do not buy puts at support. So focus on this 438.60 here as we come into the 5-minute chart. But as you can see, what did I do? I had a trade plan, like we said on the last slide. What is my trade plan? Check on the 2-hour chart, see where we're at. Do I want puts here? Probably not. I wanted calls. Does my thesis still stand? Yes. There's support here. I know if we sell under here, I know I have my trade plan. I know what my stop out is. All right. So let's take a look at a zoomed in look here. All right. Again, this is the zoomed in look. This is SPY. This is QQQ. And this is the options chart I'm talking about that I'll be focusing on tonight, guys. So within Webull and Thinkorswim and some of the other ones, you can pull up an options value chart. So we're trading at 438.56. Well, that's the count. So 438.60, I think I said it was, right? Yeah, 438.60. So that's this level here, 438.60. I got the 439 puts at 111 bucks. So we sold down. This is 5 minutes. So 5, 10, 15. This is a 15-minute candle. So a few minutes after I said this, I got in calls here and we hammered nice off this level. So this candle here is this candle here. So when QQQ goes up, my option contract goes up in value. And so what I did here, guys, is I pulled up the QQQ 439 call chart next to this chart. And what I did, I entered here at 111. So I almost got the bottom, did not quite get the bottom. Of course, huge support bounce here. So I pulled up the chart and I said, okay, I am in here. I took a quick trim actually here on this candle at 135, I think it was. But anyways, I entered here and immediately I pulled up the chart and I said, okay, this candle wick down here, the value of the contract, we'll call it $110. I set a stop. So I set a stop. I think it was either 99 or 100. So if I entered at $1.10, $110, I'm risking $10. So if we come down here, and if this candle here was right here, this would have stopped me out for sure. Because that, I mean, look at that hit 0.73. So when I entered the trade, I turned on my stop and I said, I'm really willing to risk $10 for this zone here, this overhead zone here in the red. This was my target. Of course, we got this wick here. We didn't get it because this was Jolt's market data. We got some data here. But I said to myself, if we sell down here, I'm wrong. Or if we sell down and hold, I can re-enter. Obviously, we chopped along a long time today. But I was willing to risk $10. So 9%. 9% was my risk. Keep that percent in mind. For potentially, of course, I didn't hold for this zone here, but this line here is this right here. So this candle is this right here. So I marked this up. I dragged this up. I said, hey, if we pull up to here, my profit zone is potentially, again, I didn't hold for it, is potentially 46%. So a $110 entry, that contract would have been worth $1.62, $162. So again, low risk, high reward trades. This is what we want. We don't want a stop loss way down here at 0.6. We don't want a 50% stop. When you enter here, you cannot hold through this and hope and pray that it comes back. You guys have to have a defined plan. So again, before I even entered this trade, I zoomed out, I checked the chart. You always check, especially at the open, you guys, like when we sell down, oh, we're bear flagging, we're bear flagging, we're bearish, sell down all day. It's like, guys, we are at a huge support here. And the way to play puts from here is, this, you would have got smoked, but we hear a break and retest. So a breakdown and retest this level, then you can try puts here if you want, if you think we have a bearish trend day. Obviously, that would have stopped you out, would have or should have stopped you out. But again, you guys, this makes sense. So using the options chart, I think every brokerage, probably other than Robinhood, you guys need to pull this up every single time, because if you're just saying, I'm gonna enter here, or I'm gonna enter here, I just want a 5% stop, 10%, just because 10%, that's all I want to risk. It's like, yeah, 10% is, a small risk, but it's like, if this is 15%, if your 10% risk is here and your support zone is 15%, well, why are you not risking 5% more to see if this bounces? You guys have to think, we are just very small fish, very small traders in a big pond or a big ocean. We want to follow the flow of movement, but we want to follow what everybody else is doing. Like, I know the majority of traders are good traders. They see support here. They are buying calls because they think with everybody else that, hey, this should bounce. This probably will bounce. This should bounce. If not, I'm wrong, and we can ride the trend down. But it's like, you're just one person, and you're very small contracts. Even if you buy 100 contracts of this, you are a very small fish in a very, very, very big ocean. And so you need to move with the flow, with the trend, and with high probability setups, like stuff like this. Does this first example make sense to everybody? I don't want to bore people much with the charts, but I just want to sell this home about how this chart, again, think or swim, you can do this. Any chart you have, you can do this. You pull this up and it'll link, and you can follow this. It gets a little not confusing, but you kind of have to think backwards when, if if the price moves up on the stock and you're in puts, this will be different. But yeah, let's go over another example for you guys. Let's look at SPY. This is a really good example. Obviously, it's in hindsight, but I want to again show you what you could have done today. If you have a scalper's mindset, this is a really good example of this zone right here. I say it a lot. This is probably, the Dirty River. He's a scalper. This River will take this all day long and stack it and stack it and stack. These are base hits. These are 23% trades that I'm going to show you guys in a second. And I bet Dirty River would gladly take this all day. So this is the SPY chart here on the right side. Let's look at this 1050 candle here, and it's in this box. You get in here, think we're going to have a breakout. And then what happens? For an hour and 20 minutes, we chop. We trade sideways. You get frustrated because you want 100%, you want 200%, and you're not getting it. You're not getting it. I want to show you what a couple of things you could have done here. Again, obviously it's in hindsight, but when we see this push up here and we see this line at 518.07, we'll just call it 518, we sell down. When we create this little zone here, start getting the habit of drawing areas, key interest areas. And so again, if you buy the top of this candle here, say at 0.5, this candle here, you say, okay, we're breaking out, we're over the 9, we're over the 21, we're going to push. And we come down and we chop, and we chop, and we chop. You enter at 50, it shows you 54, back down to 42, back down to 54. Two things you could have done here. You could have stopped out for a fairly small loss. Enter at 50, you stop out at 42, whatever it is. You stop out, take the loss. One thing I would do, I would set an alert, probably like, because I don't scalp. I don't like to be staring at charts this much. But if I seen this zone here forming, I'd probably set an alert, something like this, and then somewhere down here. So if we break over, this little spot, it'll say, hey, look at SPY. Maybe SPY is doing something. We break down here. It's gonna tell myself, hey, we're breaking down. Maybe I can get a better risk reward trade. But when I start seeing this, to me, I personally don't like it because I don't scalp same days like that. But if you're a scalper, I want to show you what you can do and just remind you guys of this mindset. Again, you could have pulled up this options chart here. And when we see this zone here, 517.73, it is roughly, it's going to vary a little bit because this is theta decay, but it's roughly $42 to enter a 518 call. You could have entered here, 42, sold at 54. 42, sold at 54. 1, 2, 3, 4. You could have done this 6 times, you guys. You could have had 6 23% trades in an hour. Again, this is hindsight, but I'm trying to show you guys how, the market is not giving you guys what you want. Take the base hits. Ignore those huge 100%, 150% trades everybody wants. Like everybody wants to buy the bottom and sell the top. Well, sometimes you're not going to get that. When you start seeing this, you guys can scalp this 42 to 54. That's $12. $12 a contract. If that's not a lot to you, buy 10, buy 20, whatever your port size is that can handle in your risk management. Like you can trade this all day long. You could have took scalps. You could have scalped, bought up here, puts. You could have bought puts here, sold, calls, sold, puts, sold, calls, boom, big breakout. Finally, you guys could have traded this zone right here. And so again, using the options chart, I guarantee there's people that sit here, they set the buy order 42. Okay, we push up, sell order 50, 51, 54. All right, I'm out. Buy order 42. Wait for it to fill. Oh, I just filled me. Back and forth, back and forth, And so there's stuff like this that this will stack up when you guys, you either need to accept, hey, we're in consolidation zone. Yeah, could do 120% in 6 trades. Never thought about it like that. Yep. Again, Bobby, this is hindsight. Obviously, when we're in this in the moment, we're not looking at this going, hey, it's going to sit here for an hour and I'm just going to scalp. Because what you do is you sell 54 and then the breakout happens and it goes to 100 or 150 and you're like, why did I sell? So again, this is hindsight. But I'm just giving you guys perspective of how you guys can play this, how you guys can use this chart. Also, If you buy here, again, let's say you buy at 50. Another thing, risk management. So let's just say you bought the top of this candle here. You said, okay, the breakout's happening. I bought it at 50 bucks. Shows you a little bit of profit. You come down here, up, down, up, down. You hold, you hold, you hold. You finally get this breakout. So this price, obviously, this is higher. 518.07 is higher than obviously 517.80. You hold your same contract through an hour and 10 minutes. So this is one thing about zero DTs, guys, same day expirations. There's a thing called theta decay. Your contract is losing money because a zero DTE literally expires today. So you buy at 50, you finally get this breakout. You set an alert here. You said, oh, we broke 518. You're excited. You look, this candle right here is this candle. And look it is the same price, maybe $1 more than an hour and 10 minutes ago because of theta decay. It decayed, time decay seen in an hour. So that's my point is you guys buy this. So I'm on the West Coast. If I bought this at 11, that means I have 90 minutes left in the day, an hour and a half. So if I'm buying this, I'm looking for a move, in 5 to 15 minutes max. I'm not holding an hour and 10 minutes on something that expires. That's just poor trade management. So this pushes up and your contract is still worth the same. And you're probably frustrated and pissed off because you're like, why did I hold? Why did I hold all the way down to 0.31 on a 0.5 entry? So holding on stuff like that is poor risk management on some trades. Even worse, did anybody get caught in SPX today? Look at this. This will make you want to punch some air right here. Same thing. Let's look at this candle right here. I got the right one. 11 o'clock, 10:50. I got the wrong one circled. Ignore this box here, guys. This is this candle right here, or 10:50 candle right here, guys. Same thing, but this is SPX. Oh, you guys like to trade SPX? You think it's fun? It's fun to have those big winners, but it's fun until it's not. So this 10:50 candle here, again, you think the breakout's coming. It is this candle here. Again, I'm a little bit backwards on it, guys. So, ignore me a little bit on that. But again, so SPX is basically, like a 10x SPY. It moves very, very fast. So you buy it here, you top tick this candle at 0.45 and you hold and you push up. Again, we push up through this and we finally get the breakout. And again, this is not worth the same. So this candle here, again, we break a lot higher on the chart and you bought in at 0.45 and your contract is 0.3 because you held through all this. And so SPX, even more, you guys, SPX has to be a damn near perfect entry immediately, or if not, if you hold for a few minutes, like you need a big move because these are decaying. This is the decay of the contract. So this is the price of SPX, and this is an SPX 5220 call up here. So your 5220 call, you buy at 0.45 or 45 bucks. This is literally in real time watching your price decay because you're holding through all this. The low of this down here before this breakout was 0.16. So you held for a 64% loss just for a breakout to happen. And maybe it happened on this wick and maybe you caught it. Like, again, this is bad risk management. You either buy and let this candle stop you out and say, hey, you know what? I'm wrong. This breakout, I'm not ready. I didn't time it right. But you cannot hold for an hour and 10 minutes SPX, take a 64% loss, then take a profit and cheer and brag about our posting gains tab. Like that is poor risk management. And so again, just an example, SPX, you guys, you need to be right. You need to be right really fast. But I did not trade this day. I just want to show an example because I seen this chop here. I was like, you know what? This would be a good example for tonight on how theta can really hurt people. A trade I took, one that I like. I posted this in the chat. This was the open yesterday. Disney 30-minute chart on watch for puts if we can't reclaim overhead red zone. So this was today's Tuesday. This was Monday. this was Friday's move. So I was looking at this on the 30-minute chart and I said, hey, if we cannot reclaim this zone here, again, I'll zoom in. If we cannot reclaim this zone, I'm looking for puts. Okay, so I'm building a trade plan, you guys. I'm building a plan, not diving into anything, because if you guys know me, it's 6:41, it's 11 minutes after the open. I'm letting the market settle. I do not trade the open. Okay, so trade plan is set. Wait for entry. Kermit, is 10% of the port trading over leveraging? I would say 10% max. Like, you know, 10% of your port on any trade. So, I would not be in, 10% of my position Microsoft and 10% on Tesla and 10% on SPY same days. Like that's a lot. If you're in calls on all those and we pull down, that is a big loss, and that's a tough pill to swallow. Three losing trades if the market just trends down on you. We get a kill candle, there's a tweet, there's something about the market come in. I'm usually only in one or two positions at a time because one, I only have one screen of management, and two, same thing I just mentioned. I don't want to, if I'm on puts on two things, I don't want the market to reverse on me. And then, not only you stopping out of one trade, you're stopping out of two. And so that stop loss on one trade was X amount of dollars. Well, now that just doubled up. And so to me, you always hear me say it, there's 6.5 hours in the day to make money. I don't trade the open. That's just me. And I don't get into too many things. I try not to do same day expiration stuff. I'm not gonna say I never do, but I definitely pick my timing when I do it. Good question though. Disney yesterday, so that was Monday. I want to see it reclaim this red zone. See on my charts I post, if it reclaims this, I will call it like a demand, or I will call it a support. I'll turn this green. So if not, I'm looking for puts. And again, the trade plan is set. I'm not panicking. I'm waiting for an entry. And again, if you guys don't play Disney, man, I know Empanada has, alerted a few trades, but Disney pays really, really nice. All right. Trade plan was set. I entered. We pushed up here. I'm pretty proud of this trade. I almost top ticked it for puts. So again, this red zone here. Now we're on the 5-minute time frame. We sold down. I made that comment at 6:41. So again, 10 minutes in the day, somewhere around here. We sold down. I'm not going to chase this candle. We bounce up. I knew if we pushed up here, this is a very low risk, high reward trade for me because, again, going back to that opening slide, my risk is small. It's this red zone here. And if I enter here, I know my reward is all this down here. My first target is twice the area profit of my risk. My second target is even more. My second target is down here. Again, so this options chart, I entered the 121 put. So Disney was at 122 right here. It rejected. We came down. We got this candle here. We broke the 9, which is the purple. We broke VWAP. I entered at $121. And again, this candle here, I'm going to keep up with my drawings because I like it. This wick is this wick here. So again, when Disney, the price goes down, my put contract goes up in value. So just kind of work your brain around that. So this is the option contract chart. And again, I pulled this up. I literally pull these up side by side. I'll show you this inside of Webull if we have time, but I pull these up side by side and I said, hey, this wick here is, what is this value, this wick? Roughly $1.12. So I entered at $1.21 and I said, hey, if we break over here, I am wrong. I'm willing to risk, what is that, $9. So I'm risking 7%, you guys, 7% risk for potentially, I got stopped down this trade, but potentially 30% or more. Obviously, you guys see, I got stopped. I sold here, it bounced, it stopped me out. But I could have set alerts down here if we broke down, and you see it paid, $173 from 121. But my point is 8% risk for this huge reward zone here. So again, 8% risk is this zone for this big area down here. So you guys need to make trades and trade plans and ideas like this where you enter puts and you're like, you know what, if we pop up, that's fine. My risk is so small, I'm chilling, I'm fine. I don't care if it pushes up. My risk is small. And when you guys have a trade plan and a stop loss on, you can sit through a little bit of this. If it moves up like this, you can sit through this because you have a trade plan, you have a stop loss. You know that uh, based on this chart, you know this zone here, this zone, I knew if it rejected or pushed over, I knew we'd probably push up again. But if we reject this close here, the previous day close, also that wick there is yesterday's close. Excuse me, I just had to take a drink while talking. Does this make sense to anybody? Everybody, sorry. Again, I don't want to just talk about too many trades. We have 20 minutes left. Does anybody have an example they want to share? Walmart, I never got to that. Look at that. But stop losses. If anybody has any questions, feel free to open your mic, ask questions. It's open Q&A on stop. Let's keep it on topic. Stop losses, taking profit. Charting. If you do, let me know. I can pull up the chart for you guys and we can go over it together. If anybody has anything, let me know. Bobby, do you have one? Do you want to unmute and go over your trade plan? You should have unmute permissions if you want to. DAL. What's up, man? How are
you? So I actually posted this chart right at the top where it was around 49.20 or 48.89. So I posted this yesterday. Like, I'm still learning to chart and trying to get familiar with that. But I had I looked at, I think it was maybe the 20-day or I don't know, like a month or whatever it was. And it just looked, to me, it looked like it was trending, like it was going down. So I posted a screenshot in there and asked for feedback, but I just went ahead and said, screw it. And I did a put right about where that top, right around 48, 489.
Look at that.
And then
let's
I just
let me
assumed
pause
that it
real
was
quick.
going to
Let's
go
take a
down.
look.
Yeah.
Let's take a look. 48. Okay. So you know me, I always just change it color just so see where we're at. So ignore all this, guys. These are my day trading scalping lines. So look what he did here. Look what he caught, because hopefully he did, or at least he zoomed out. So this is the daily time frame here, guys. This is July 23rd highs right here. Like, okay, if you are a shareholder and you buy the top, I just want to give some thesis and perspective real quick, and I'll let you finish. If you're buying last year and you hold through all this, and you dollar cost average, and you buy and you buy, and we push up here, what do you think people are going to do up here, you guys? They're going to take profit. I can tell you, if people were break even here and they held, what is this movie? I don't even know. That's a 35% loss. So if you're in shares on a 35% loss and you held it for 8 months and you get back to break even, what do you think is going to happen? There's going to be people taking profit or selling on this huge double top here. All right, go ahead, my man. Continue. So you entered here. I love
Yeah.
this.
So
I love this trade, man, for sure.
yeah, so well, here's the thing too, is like it was like 3 weeks ago. It was the one of the first trainings I've been on with you, and you had showed a screen of like the most common trades.
Uh-huh.
And I put those all in my watch list. And so I was looking for trades where I'm like under $100 as far as like the value. Just
Right.
that way I can maximize, and just if I do make if I do fail, it's not a big loss. But I just felt like that one was just because I don't necessarily know how to chart yet. I looked at the last, few months, and just I felt like it was at the top again. And so
Yep.
I wanted to catch it on the swing. And then it dipped. It dropped quite a bit this morning. And I mean, I think what was I think I got like a 58% profit on that. I made $180 and I was in for $78. So
Man,
I
that's
mean, it was a pretty good trade. And then I sold, probably right around the bottom, and then it kind of went up a little again and kind of just stabilized out.
nice. So I just want to add one more thing, and then we'll go over your like contract price or whatever. But yeah, so when you build a trade plan, for you or anybody else, like zoom out. And the first thing I would have done is, you can change the color if you want to, but like you said, he's in this 4089. It looked like it could be getting top heavy, or maybe need a little breather. Maybe like, hey, look at RSI if you like using that. I'm gonna close that, get some more chart real estate. But anyways, you see me draw these zones all the time, you guys. Just again, this is just a small thing. It's just a mental thing. So if I entered here, say I entered on this candle here, and we push up, I'm like, oh man, we're red, we're red. I have this overhead here to, again, like I say, it's my trade plan to say, hey, I entered puts here at what I think is a very, very big double top. I'm willing to hold through this zone. And so this is just a little thing, you guys draw stuff like this on your chart. So when you enter a contract and you see red, you don't freak out and you stick to your trade plan. So you can see this, and you know what? Yes, it's red, my entry, but this zone here, I know we'll just call this a supply. This could or should reject or could or should have trouble. And lo and behold, you kind of, you're green. I don't know where you entered. We can go back in a second. We push up, maybe you're red, but again, hold your trade plan, you guys. Stick to your trade plan. Draw stuff like this so it gives you confidence that, hey, you know what? This is a resistance zone. Yes, I'm a little bit red, but hold through this. But all right, man, I didn't want to cut you off. So what strike and expiration did you get?
So strike, I was 47.50.
4750. Okay.
Yeah. And so I closed it out yesterday,
Okay.
or I'm sorry, this morning.
This morning.
But
Okay.
the one mistake, like I think it was Ivan had asked about expiration. So this is a lesson learned today.
Mm-hmm.
Yesterday I messed up and I accidentally left it at a 5-day expiration. So it was expiring on Friday.
Mm-hmm.
So this one I was like watching like a hawk, because
Yep.
usually I'll set it like 2 or 3 weeks out.
Right.
Um,
Yeah, you're dealing
and
with so anybody doesn't know theta right here. Theta is your decay. So $9. This will get bigger every day. I didn't mean to cut you off too, but this is your theta. So each day that goes by, guys, in the market, look at theta. So this contract, say say he got in and it literally just kind of went flat, and barcoded. Like it just went like this all day for 6.5 hours and barcoded. At the end of the day, his contract will lose $9 in value, roughly, because that's what your theta tells you is this is the decay per day on your contract. So theta is $9. And like he was kind of hinting at, buy more time and this theta, so we can check like say he wanted to get a May contract at the 47. So if he got a May contract, a May 47 put, his decay per day is $2 compared to 9. And so that's something you guys need to pay attention to, because theta is a big deal and it's a real thing. And, like I said on that SPY example, we chop for an hour, we push up, and you guys might be saying, the newer people, it's like, well, why is my contract still down? Theta decay. All right, brother. What was your entry price?
it was intro is that's another thing I'm still trying to get down. So it says limit price was 0.26.
Yep. So 26. I'm just going to draw it so people can follow along. Hopefully it makes sense on the chart.
Yeah. And then
And
my
did you enter on this breakdown here on weakness on the end of the day?
I did, yeah.
Perfect, perfect. And what made you enter? Like just to kind
So
of test the hype.
I was just like I had a couple wins, and I was looking at just some of the cheaper stocks that were out there that were, kind of movers. And again, I saw this one and just saw that it had been at its peak. So I was like, well, let me give it a shot and see what I can do for a put.
Yep,
And because it looked like it was trending down to me, and that's why I asked for feedback in that charting channel.
yep.
And then sure enough, it did. And I closed it out at 0.86.
Oh man, that's a nice trade, dude.
Yeah, dude, it was probably the best one that I've had. I made 180 off of it.
That's awesome. So yeah, to
Yeah, it
recap,
was.
guys, he kind of seen this double top overhead. We open here, we push up. I'm not going to say it's a guarantee, but when you have weakness all day and you close even lower than you opened and lower than where you started, like, and you're in profit, that's a good reason to hold runners. Yeah, we could have opened here or gapped up. Like that is a very good reason to take a chance. Like he admitted he swung a short dated, that's fine, but like take a chance. And then when you see like, man, let your winners win. This type of move is your guys' reward for putting the work on charting and setting up a play. Like maybe he could have entered here and like sold some in trim and sold one. Like this is where they say let your winners win, you guys. Like this is what builds ports. And like This is how you stack money right here, man. That's a good trade. That's a good trade. Nice work on that one.
Thank you.
Let me scroll up, guys. Do I ever change my stop loss? Nope. That is a very good question, Scotty. When you change your stop loss, so say, say I entered here and okay, my stop's here. And then we push up and I turn my stop off. And then like, hey, I'm gonna move my stop over again. And we push up. That's when what happens there, Scotty, is when you keep the market goes against you and you're not accepting a loss. And that is bad trading. And so me, I, you know, I take losses all the time. I took losses today on some trades. But when I enter a trade, I set a hard stop and I set a stop loss that, not a cocky way, but is obvious that I'm wrong. So like going back to that Disney trade, like I entered on that Disney because I knew yeah, it was this day. I knew if we pushed up, like this is an easy stop out for me. This says, you know what? I'm wrong. It means I'm back over the EMAs, I'm back over VWAP, and it means I have now reclaimed this low zone here. And I should be looking for calls. Like I'm not gonna just get in puts, move my stop. Oh shit, move my stop. Oh shit. Like that's bad trading. Like you guys, losses happen and you need to accept the losses happen. The key is if you keep these losses small, when I stop out, I mean, what did I say? I was risking 10 or 12 bucks on this Disney contract. Like I should be fine losing 10 to $12 a contract, you know, because I'm not full porting. Like if I full ported and I lost 10 bucks per contract, however many contracts that would be, like, yeah, that might hurt. But when I'm in and my position size is in check and regular, like a $10 loss or 9 or 10% loss on a trade is nothing. And it should be nothing to you guys. And if it's a lot, it means you're over leveraging, it means you're full porting, stuff like that. And so me, I try and find, again, they're not perfect. Like I said, if I would have gotten to SPY today and sat through that chop, like that would have been frustrating for sure. But to me, I look for very, very clean trades. Like if I don't see anything, I'm pretty quiet in the chat. Like I'm just there's nothing I see. But when I see stuff like this, like a push up and a wick here rejection, like to me, that's an easy stop out point. We sold down, we push up, we're rejected. You know, this first 30 minutes of the day on Disney, we're rejected. That's an easy stop out. And so again, get into trades, you guys, where you don't have to think. You make it easy. You're not stressing your palms. You're not sweaty, stuff like that. Make it easy, you guys. Dominic, how do you tell if something's at a key pivot? Areas I struggle with entries. That takes time and practice with charting. But for me, the quick answer is every day. I tell people this a lot. If you're in my Discord, not Discord, if you're in my lectures and stuff, every day, pre-market, I go the 1 hour, the 30-minute, and you see on every one of my charts, I have two alert levels. So every day, Dominique, I chart pre-market. So tomorrow, maybe we open flat here. I'm setting an alert right here. I want an alert going off if we break yesterday's high and last week's high. And I'm setting a low zone alert because I'm not biased. I will day trade anything. I'm setting alert for probably right here. Why did I pick right here? 122.4. It's kind of this zone here and this zone here. So this is, I wouldn't call this a pivot, like a big area by any means, but like pre-market, I set two levels like this. And I literally go through every single chart on my watch list, every single chart. And I set two levels, top and bottom, in every single chart. But to answer your question on pivots, that term I used, is QQQ. There's a lot here, gonna get ugly, but basically, I mean, obviously DM me or ask questions too if this doesn't answer it, but like go the hour, go the 30-minute, go to larger time frames, and you can start with 0 lines on the chart, you guys. I'm not gonna delete them, but I'll hide them. Just as an example. Like say this is your first day in the group, you've never charted anything before. and you're looking at QQQ, go the 1 hour and just say, hey, where does market, where does it pivot? You know, I keep throwing that term around, but like push up, pivot down, push down, pivot up, pivot, pivot. Kind of say that in your head and look for these big swings, and then just start marking some levels. And then when you do, it's like, you know, once you're in the market for a while, like when we sell down, everybody laughs at this, but like if we sell down to the 420s, 425s, like this is ugly on a larger time frame. But you know what? When we sell down here, I don't need to chart any of this shit. Pardon my French. I don't need to chart any of this. I'm ready for whatever happens here because I have all these levels from the last 3 years. And so it boils down to charting, and then you can trade. But everybody wants to trade. They want to dive into stuff on their phone and they have no trade plan. But yeah, just look for key levels. But again, send me a DM if you're ever struggling. Just say, hey, I'm looking at DL, Delta Airlines. These are my levels. What do you think? I'm gonna say, oh, this is good. You got this level here. Maybe you don't have this zone here. I'd say, okay, well, if we sell down here, I'm gonna say, hey, look at this zone. What about this? You know, I think you should mark 46, 46.05, and you'll say, okay, you know, so we can work together. But don't just say, hey, I want Delta Airlines. Will you chart it for me? I'm gonna say no because I don't handhold around here. I don't have time for that. Like you guys got to put some work in. Oh man, head shoulders. That would be nice. Look at that. Let's not get ahead of ourselves, but that'd be nice. But yeah, put some work in. Anybody wants to chart? My DMs are always open. You know, you don't have to like send a friend request or anything, nothing like that. You don't need to. Just send me a DM. Say, hey, I'm looking at this. What do you think? And I'm gonna say, okay, what's your trade plan? Because I want you guys to put in some work. In this situation, what expiration would you have set for the put? Long if you want to write it out, zoomed in trend, shorter, right? Yeah, so I think you're talking about Delta Airlines. For me, honestly, if this was my trade and I got in when Bobby did, I would set alerts like this, something like that. So again, because of that zone we marked there, again, let's pretend this is today. I would already check on the old chart and I would know this is a key level here. So if I entered anywhere in this zone here, I don't know what the contract price would be, but if I enter here, you know, somewhere in here, if we pushed up and sold down, I don't know if I would have took puts in here. I don't think, you know, obviously he didn't either, but I would probably wait for this zone to break down. And if I have time, like say I have 4 weeks out, I would probably send alert something like this and write it out and see where we close. But if it's 3 days to expiration, like if we push up and we close over here, I'm wrong. I'm not swinging this. Hopefully that answers your question. Rudy, 2 weeks out, you get less gain or the same. I'm not sure what you mean. So Rudy, shorter dated contracts, you know, they're going to pay the percent and the dollar amount, but it's the risk. And so when you buy time, time is your insurance, time is your safety net. So Bobby or anybody for that matter could have bought if he wanted to. He's like, you know what, this is double top here. I want to buy a contract 6 months out. And he absolutely has the right to do that. He can buy a contract that expires in June. He could buy the 47 puts that expire in June. And if this is the move he wanted, he could have sold the next day. He has the right to do that. When you buy time, that's your insurance that, hey, I'm buying here. I don't know if we're going to push up tomorrow or the next day. I don't want to be right instantly. I just want to be right. And so I'm buying a contract with 6 months of time. That is your safety net. We sell down here. Who cares if the contract has 120 days left or whatever it is? Like you can sell. But when you guys sell and swing or buy and swing the shorter dated contracts, the shorter the date, the quicker you need to be right, and the quicker you need to admit when you're wrong, basically. Yep, put a trailing stop. Good point, Scotty. So trailing stop. So say you entered here. Let's go back and look at this 47, right? 47 puts. This was okay. So say we've seen this move here and say he top ticked like perfect entry. He got it like this here is this. This is $9. Say he got a perfect entry at $9. I'm for sure when we, or say you got in here on this $9, this entry here, come down, push up $9. We come down here and now it's worth $20. You're absolutely right that I'm moving stops over entry or stops at break even. Like if I entered here at $9, I would set a stop a little bit higher, but once we're in profit, you move the stops down so you cannot lose. You move the stops down. We break down here, maybe you take this new trim here, you move stops down. Like you guys need to get in the habit of rewarding yourself for good trades. There's no way something should be up 40% and then go red. Rena, PayPal. Not pivot, PayPal. Here we go. Yeah, we've been playing this one a lot. This is nice. Pivot from March 25th. We close up that level. Let's take a look. Ooh, good eye. Yeah. So PayPal. All right, let's do it. Why not? If you guys want a trade idea, not saying it's an alert, it's an idea. If this for me on PayPal, this might be a really good one tomorrow. We'll see what pre-market does. And if this is a good trade, you guys all tag Rena and you say thank you for the money. And if not, you don't blame her because she didn't push the buy button for you. But similar to Disney, guys, remember that Disney trade, remember that Disney setup? Good eye. Look at that 65. I would be, where are my alerts at? I don't know where they're at. I'm setting an alert for this right now because I like this trade. Set an alert here. Oh, there they are. They must have been hidden. That's weird. Okay. And probably something maybe like puts can pay, but again, I always say look left. So like we may be in a bear flag in the morning, but I'd be really mindful of this little pocket right here because that could bounce you hard and that could hurt. So good eye, Rena. So we could open tomorrow in a bear flag, but be mindful of this zone of this yesterday low consolidation pocket. Like even, keep calling this zone pivots, but we sold down, we pushed up. Why did we push up here? Like when you guys look at the chart like this, a little bit off topic, but when we sell down and push up and maybe you're in puts and you stop out, like, yes, accept the loss, but also ask yourself, why do we push up here? And you need to look left. Okay. Look at this pocket here. That's why we bounced. We came down, we bounced because of this zone here. You have to understand, when we're buying option contracts, it is the movement of shares. And so when we sell down, there's people buying shares here that say, you know what? I want to buy in here at 64.30. I'm buying shares here. That's what happened. They bought it and they bought it up. And so this is a pretty good trade, sort of a tight zone, but not super bad. But if we open here and we push and we got kind of a sideways or weak market, I'm not saying to short it, but I'm saying watch this level here that she pointed out because, again, on the top side, that's kind of a pivot. And so push up and over, we move. Down, we had some selling pressure, but they bought it back up. Down, what did we do pre-market? Under this, we sold hard. And so, like she pointed out, find these key areas. Like PayPal's been making really nice moves. Again, call it a pivot, whatever you want. Over this, big moves happen. Under, big moves happen. Over, big moves. Under, big moves. Again, these are the key areas. These are the trades you guys want. Like you don't want to be buying, like when you're in the 15-minute and you see wicks on both sides like this, you guys, this is indecision. Nobody's winning this. Bulls push up, bears smack it down. Bears think they're winning, bulls push it back up. This is indecision for an entire day. Do not buy on levels like this. Set alerts on break up and breakdowns, but look for key levels like this, where if you short this tomorrow, like your risk is so small. If you get, if there half puts, let me see, PayPal, half strike. No, full strike. So we're at 65. If you get a 64, like make it obvious again, I'm not saying get inputs, but I'm just saying this is a trade idea. Like, if you get inputs up here, this is your risk, very, very small again. This is your potential reward, you guys. Make it easy. Again, like I keep saying, make it easy that if I'm in puts, I'm writing this down and I better be trimming here because it's a key level here and I better be trimmed down here. So literally draw this on your chart and ask yourself, is this a good trade? You know, or on the flip side, we can do it both ways, you guys. If we push up and we hold here for 30 minutes, an hour, I'm looking for calls because we're up over here and now we're flipping this. Okay, does everyone follow me? Now on the opposite. So if you enter here right at 65, we have these wicks here to play with. So now this red zone, now I'm in calls. I have a very small risk that if I get in calls here and we sell down, I'm wrong for a small loss. But if we push up here, I'm not saying this whole green zone is your area, but it could potentially be. But now you have this whole area to play with because we hold this zone here. We've seen the moves that this makes when it gets over 65. We've seen these moves. Is anything over here? No, that's the start of it. Good eye. Yep, everyone, we're gonna find you tomorrow, Arena. Mike, you're welcome for the class. Was before Disney. Question works for either. Oh, sorry, I didn't know your question, Ian. Let me scroll up. Sorry about that. Yep, same thing for Disney. So kind of like we just flip the chart here or flip support resistance. Same thing, Disney guys, or anything you're looking at. That's literally, it's just a dancing game every day. Man, I think we're done with this lecture. Every day that we play, it's a dancing game. You know, top alert, bottom alert. We push up, I'll be a bull. We come down, I'm a bear. I do not care. Like I said, I'm just day trading. I'm not an investor on PayPal or at the moment. I'm just day trading. So don't have a bias. Just set 2 alerts like I do every single day. And I just sit there, I help people in DMs or on the trade floor. And I just wait for an alert goes off. An alert goes off on PayPal. And I say, okay, maybe I should look at PayPal. Hey, we're talking about PayPal last night. And I say, hey, we're looking up here, you know, and I act on it. And that's all I do. Let's see, we got it. Ian, can you mark levels on desktop version of Robinhood? I don't think you can. Yeah. What a lot of people do, Ian, is they trade, like buy their contracts on Robinhood, and then they chart on what's TradingView, TrendSpider, Webull. It's a little extra work, you know, for me. You know, I'm not going to tell someone not to trade on Robinhood, but it's like, you know, you chart on this, you know, you might as well just hit the buy button in it. But I get it. You know, I'm slowly learning on Thinkorswim. Like I paper trade on Thinkorswim as well. My charts are not blank, but almost blank. They're not as developed as this. And so, you know, if I took PayPal tomorrow, I might take it on Thinkorswim as well. Yes, it's a different brokerage, but it's because I'm trying to learn. So I'm not going to tell you not to do that. But if you guys are not trading, um, you know, put some work in. You guys, you got a chart. I get it if you're just starting out and you're looking for alerts. I can't argue with that. I cannot be mad at that. But if you want to be good at trading, you want to start taking trades on your own, like it starts with charting. And really, like, look at my options watch list. There's 30 here, small port, cheapies I like to play. There's 20, there's 21. There's 21 things I need to chart. And so I'm not asking you guys to like write down 21 stocks and chart them all tonight. That's a lot of work. But like, you can literally pick one per night. And again, go to the hourly and chart it out and just chart like the last 2 weeks. You don't have to go back to like 2015, just chart the last 2 weeks. And I guarantee with this market consolidation we've had on almost every name in a watch list or names you pick, you're going to have really, really good levels to play with. And so it just, once you have the charting done, like your heavy lifting is done. And so every morning again, pre-market, I just set 2 levels. And then I go to Bank of America and I set 2 levels. I haven't played this in a while. You see my levels down here. I'll probably set a top side and a bottom. And that's literally it, you guys. And then market opens and we have some fun and I just wait for the trigger. That's it. But you guys, you gotta start charting. That's the only way you're gonna be successful. You're welcome, Bobby. Glad to have you here. Robin is slow. All right, guys and gals, any other questions? I'm not in a super hurry, but we are 9 minutes over. But any questions with stop losses, the options chart? Anybody? Nobody? Good. Again, last few seconds. This should be your motivation. I share this every week. Everybody sees this. Everybody knows. Take a look. Whatever your report is, look what 50 bucks a day or 25 bucks a day can do. This adds up. 50 bucks a day. That's gas in your tank. That helps pay off your car. That's your grocery bill. That's a night out, a partial night out. Depends how much you drink or dine out. 50 bucks. It adds up quick, you guys. 25 bucks a day adds up quick, 5 days a week. You guys do the math. There's 252 train days in the year. We are 25% through the year, guys. Can you believe it? So I don't know where we're at on this scale, but 20, 40, 60, we're somewhere down 60 days in, 60 trading days in. So set some goals, you guys. Have some motivation. Hopefully next time you're up 50 bucks on the day, I always say if you've seen 50 bucks on the ground, you're walking in the park, you've seen 50 bucks, are you going to walk by and just say, oh, whatever? Or are you going to pick it up? So pick up these 50 bucks every single time, every trade. They're in your port, they're in your pocket. This is how you build a portfolio, guys. Do not get greedy. You want exponential, you want a nice linear growth. You don't want big peaks and valleys. But again, this adds up quick, you guys. So my last parting words, if you guys have any questions, send me a DM. I'm going to help people that want help. But like I said, I'm not going to spoon feed you. I'm not going to hold hands. If you see me a chart, I want some ideas on top and bottom. Doesn't have to be a long-winded sentence, but put some work in, you guys, and I promise the success and the good trades will come. But with that, everybody have a good night. Tomorrow's Wednesday. We probably got I think tomorrow is full of Fed speakers. Check the news tab. But trade smart, guys. Again, DMs are always open for those who want help. Have a good night, guys.